Uber up 41% this year after reporting its best quarter yet yesterday. February 8th, Uber reported its fourth quarter earnings. We're going to talk about their earnings. We're going to look at their earnings. We're going to go through everything that they're doing. And any guys and girls that have followed me, y'all already know what time it is. Go ahead and share this for the late night show out here in Denver, Colorado. But ladies and gentlemen, if you haven't done so already, y'all know what time it is. Go ahead and make sure.
Hit the subscribe button, hit the bell icon, hit that like, comment, and share button.
Once again, ladies and gentlemen, boys and girls, and children of all ladies, you already know what time it is. This is the Investor Show. My name is Prince Dykes. I'm the Prince of Investing. Until the next video, y'all already know what time it is. I don't have a lot of time, and I definitely know you guys and girls don't have a lot of time, so we're going to jump straight into it. Let's get my words jumbled up there. I think I was doing my outro. I was supposed to be doing my intro. But ladies and gentlemen, if you are catching this live, come on in and say hello. I should have said I need to set up my phone line again. I keep forgetting that until I go live, but I'm going to set up my phone line so people can talk. I kind of do that during the day, so when people have time to come in, we can sit down and talk and go over these things. So today we're going to go over their quarterly report they reported yesterday. So people have been slowly this year. Uber's been having a pretty good year stock-wise compared to its competitors, Lyft. People say, Prince, why are you so big on Uber? I don't care about the company. I look at the sector. I look at their gig economy. You got Uber, you got Lyft, you got DoorDash, Grubhub, and some other little smaller people in there. So when I look at that industry, for who's number one, which is Uber, to number two, which was Lyft for a while, it's not even close. And I'm going to make a compelling argument why it is the time for Uber to just stop playing and go ahead and buy Lyft. So let's take a look here. Let me pull this up here and share this screen. Where are we at here? Here we go. Make sure I got the right one up here. There we go. Oh, there we go. So right here, ladies and gentlemen, you can check this out on the investor relations website, which is investor.uber.com. So here I'm going to look at their quarterly reports. This is what the company said on February 8th. This is the fundamentals. I always tell people when it's a bull market, the last 2 years, if the stock was making money, nobody cares about the fundamentals. But the time something goes left, everybody cares about the fundamentals. So we see it happen in crypto. A lot of people purchased crypto. They didn't care where the crypto came. They didn't know where it was made from. They didn't know nothing really about it. All they know is they made money. They told their families and friends. Now that crypto has had a horrible last year, and so far this year they're doing okay. Guess what everybody's doing now? Everybody's digging in the fundamentals. Oh, let me see how many coins out there. Y'all tell me more about these coins. That happens in every aspect of every investment people make. I've done it myself a million times. When it's making money, you can buy art painting. As long as it's going up, nobody cares about the fundamentals. But as soon as crap gets fishy, everybody becomes Sherlock Holmes and want to figure out what the heck is going on with their money or their funds or their investment. So if you keep up with the fundamentals, you can sleep well at night. So the first thing is I look at the sector of the gig economy. When I look at technology, I don't compare Uber to a tech company or Uber to a Walmart or things like that. I look at your competitors. It's not about you. Sometimes you don't have to be the best in the business. Sometimes you just got to be better than the rest. So we see this happen all the time. It's like if you had a corporate job, you don't have to be the best in the industry. You have to be best in your particular field where you're at in order to excel, the best on that team. So let's look at that space. You got Grubhub, you got DoorDash, you got Uber, you got Lyft. That's all in that space. It was Lyft and Uber was the top two, but you've seen Uber's been going through some hard times. So right here, let's look at Uber full quarter. February 8th, gross book earnings grew 19% year over year, 26% year over year at a constant current basis, overseas or whatever, right? Mobile gross bookings, adjustment EBITDA, and adjusted EBITDA margin, all-time quarter highs. So they reported their adjusted EBITDA margin at an all-time quarter high. Coming out of San Francisco, they report their quarterly earnings. They said their gross bookings grew 19% to $30 billion, 26% on a constant current basis, right? Revenue grew 49% year over year, 8.6 billion or 59%. When I said 59% on a current constant basis with their revenue growth significantly outpacing the growth. The gross bookings grew due to change in the business model to our UK mobile business and the acquisition of Transplace by Uber Freights. So Uber is broken down in three pieces. It has three ways it makes money. It gives you a ride, it delivers you food with Uber Eats. It gives you a ride with Uber. Delivers food with Uber Eats, and it has Uber Freights. The number one driver before the pandemic, it was Uber giving you a ride. Then during the pandemic, that's when Lyft fell off the face of the earth, but Uber Eats skyrocketed and kept the company alive. So Lyft is like a one-trick pony where it makes money one way, much like Facebook makes money through ads. Uber has three ways it makes money, and you'll see that down in the statement some more. So look at that neck. Remember that Uber was trying to become profitable. Uber done fought over that. It done became profitable. Now it's dominating the space to where Lyft is just, come on, Lyft used to be $80. Now Lyft is $16, ladies and gentlemen. It was $80 when it IPO'd. Now it's at $60. Uber was at $40 back when it IPO'd. Now it's at $35. Right. So when you're comparing the top two giants, I want to know what Apple and Microsoft is doing. I want to know what Walmart and Target is doing. I want to know what Coca-Cola and Pepsi is doing. I want to see the two juggernauts. How do they compare and contrast to each other? And it's not even close. Uber is dominating. Uber need to go ahead. I'm going to make this compelling argument now before I even go any further, right? Uber needs to, let me go ahead and put this in. I want everybody to see this. Uber needs to go ahead and buy Lyft. Lyft has a market cap of $5 billion, right? It's in the perfect prime position to go in and buy your competitor. Would it become a monopoly? No, because you still have Grubhub still there. You still have DoorDash that's still there. And now you're buying your competitor, not because Lyft is the greatest thing in the world, but you can buy the name, keep the name, let them keep doing what they're doing, because some people like the way Lyft do things. Most people that do Uber do Lyft. Most people that do Lyft do Uber. Uber, stop playing. Go ahead and buy these guys. They have a market cap of $5 billion. Go ahead and knock them out their misery right now. Perfect time. Now let's go down to their finances. Let's see how much money they got in the bank. Let me find that balance sheet. Let's find this balance sheet. I want to see how much money can they really afford to buy Uber if they wanted to. Let's see. I'm pretty sure they could do it through a leveraged buyout. There's plenty private credit companies out there that would help them do that too. So let's go here. I'm strolling down to find their finances. Let me make sure that y'all can. I didn't even share my screen back, y'all. Here we go. I'm strolling down to find these finances. Here we go. Right here. Where we at? That's their revenue. Okay, here we go. Let's see what's money in the bank. Here we go. Their assets. This is in millions. So they got $4 million. So right now they're reporting $4 billion in cash equivalent. Let's look at their current assets. Their total assets is $38 billion. Their total liabilities are $23 billion, putting them at a shareholders' equity of about $15 billion, which is pretty good. Now you look at total assets. So right now, total current assets, this is money they can turn over in less than 12 months. That could be in T-bills, cash, whatever, right? Short-term investments, $8.8 billion. So in short-term assets, Uber has enough money to go ahead and buy Lyft. Y'all let me know what y'all think there when y'all looking at this. So let's think about it. Uber right now has $8.8 billion in current assets, money that they can turn over into cash in less than 12 months. Also, Uber has $4.2 billion sitting in cash. Right now, Lyft has a market cap of $5 billion. If I was Uber, I would do a leverage buyout to go ahead and buy your competitor. Go ahead and buy Lyft. So that's the number two competitor in your space. Go ahead and get them out the way. Now you're not going to be a monopoly because you still got DoorDash and you still got Grubhub, but DoorDash and Grubhub, they only deliver foods. So now you could be the number one deliverer in the world. Don't need to change the name to Lyft, anything like that. But that's why Uber should go ahead and buy Lyft. That's my opinion. Y'all let me know what y'all think of that. As we're looking at it, they got the money to do it. They have $8.8 billion sitting in current assets. And then you look at what is their current liabilities. The current liabilities is current liabilities is $9 billion. That's not too happy to look at that right there, right? So because that's putting their cash burn pretty high, their working capital could be affected by that, right? But I will maybe not right now. Looking at their current liabilities being at 9 billion and their current assets at 8.8 billion, maybe not so much right now. But they could do it in a leveraged buyout. I'm pretty sure somebody would sponsor that or whatever. $5 billion, that's what Lyft's market capital is. Definitely do it. So when you look at this, right, they have a total, the network of the company is like 50 billion, $15 billion. Now they have a negative when you look at when you take the current assets and the current liabilities. I forgot what that's called. Ooh, that's slipping my mind right now. Yeah, I'm sorry about that, y'all. But that's not a good number right there. I always want to see the current assets. That means if they took all the current money and had their current liabilities, everything that's due within a year, that's not a pretty sight right there. Not too excited about that. But their long-term debt, right? The long-term debt is not even $1 billion. Look at it, 935 million. So I do like the long term. The short term, they are burning through cash pretty fast. So let's take a look. Let's look at the revenue. The revenue is going to talk about it. Look at that year end. Last year they reported revenue of 17 billion in 2021. Last year, look at that, 31 billion. 17 to 31 billion. Look at that money that's coming in. This is the top line revenue. Look at the quarter. Last year, this quarter, they had 5.7 billion. Now they had 8.6 billion. Now you look at not their total losses, interest. We want to go on some. Just look at their bottom line. Just get down to the bottom line. Where's their bottom line at? So look at this, right? You're talking about in 2021, they reported about $1 billion in adjusted revenue. Now this year they're a little bit down. I got to look some more to see why did they come down here. Now in 2021, they had a loss in 2021. At the year end, I'm sorry, y'all, I'm talking about the quarter, but now let's look at the year end. They reported a loss of about $1 billion. Now they reported a loss of in 2022, 9.1. Not something I'm overly concerned with. I know they brought some companies or whatever that hurt their bank account. Not too impressive when you look at the bottom line. And you're seeing right here, cost of revenue. That's what changed right here. You look at it in 2021 was only 9 billion, now it's 19 billion. So the cost of revenue went up drastically. I think that's when they went out and brought a bunch of companies. So you're looking at $10 billion increase right here, cost of revenue, exclusive depreciation, amortization, right? So, but when you look at Uber's numbers, and if I pull up Lyft, oh my goodness. You look at who's number 2 in the space. I've been watching these two hand in hand. It's not even close when you look at it, right? So when I look at it and I look at Uber this year so far, oh, that's my guy Al. What's going on, Al, on the Nate Night Show? He's saying, yeah, I agree with that, right? Now, they did buy a bunch of companies. They did do a lot of buyouts already, what kind of puts them in a weak area. But when you look at it, people, they're not really paying attention to it as they're seeing it. They look at Uber. I said it a million times. Elon Musk, when he brought Twitter, I said, what are you doing? Just go buy Uber, man. Just buy, I can buy the number one company in his sector for that $42 billion he spent on Twitter. He could have brought Uber and then turned around and got Uber and put it with that autonomous driving or whatever the case may be, put autonomous cars on there. And because you got to think about it, the number one thing Uber struggles with is people. People. That's the number one thing Uber struggles with. Uber drivers workers? Are they W-2 or are they W-9? Which one are they, right? Do they get a W-2 or they W-9? Are they independent contractors or do they work for Uber? That's always been a big thing. Tesla could come in and alleviate that whole problem, put automatic electronic vehicles to deliver food, to give people rides. That's what I was saying. But I get it. I look at Elon. Hey, he's a billionaire, and he's made more money in his life than I ever will probably see in my life. So good on him. Who am I to tell him what to do with his money? If he wants to go take it and buy a rocket and ride on it, he got every right to do it. But I looked at it and said, hey, Uber now, when I look at it, it's in the right position for somebody to buy it. Apple, Tesla, Google is coming in that right position to be brought out. They made some big acquisitions. When you look at that entire space, it ain't going to disappear. What's going to happen with that space? You watch Lyft. Lyft was the top guy. Lyft was top when it came down to the economics of Uber. Then you saw Lyft just slowly come down. You saw Lyft slowly come down, and now you're seeing Uber take over the name. You're seeing Uber in the airports. You're seeing Uber in movies. Uber is now an adjective, a noun. People say it all the time, man, you better go get an Uber. Hey, man, I Ubered her over here. I Ubered him over here. We Ubered over there. It's becoming ingrained, like the word Google, right? When you said, people don't even say, hey, man, you better go search this, or you better go look this up, or I was on this search engine. People even call Bing Google. Anytime somebody's looking for something, man, I was Googling it and I was this. That's what Uber has become. How crazy is that, right? It's just like when people think about a soda, nobody says, well, I forgot Midwest people kind of say pop, but they call it Coke, Coca-Cola. When they look at diapers, they say Pampers. Pampers is a brand. That's what Uber has done to the rideshare business. So I'm glad to see that they're up, coming back, making it strong. They haven't moved past that IPO profit, but you can see it when you look at all the other competition in that space. It's not even close. And when you see companies that are that big, they are ripe. They are ripe for somebody to come in and buy that company up. Either Uber is going to be brought up, or Uber is going to turn around and start buying the other people. First, start with Lyft. Lyft is at $16 right now. He was at $80 at one time. I don't even want to pull up. You know what? Just do it. We in here tonight. Y'all want me to go and look at Lyft? Y'all want to look at Lyft? Y'all just saw a little bit of those Uber numbers. Let's look at these Lyft numbers. It's late night. I don't care. Let's look at some of these Lyft numbers. Let's go. So then you guys and girls can put a lot of things in perspective. Let me pull it up. I didn't pull it up. I didn't think about it. They just reported their earnings. Lyft IR. So IR stands for Investor Relations. Just look at their quarterly earnings, and the annual is probably going to be piled in here. I'm sharing it with y'all, right? Y'all can see it. Oh, let me bring it up. Oh, that's my guy Brandon. What's going on, Brandon, down there in Augusta, Georgia? Man, I need to hit you up, man. I need to hit you up to see how you and your wife doing, man. Definitely. Sorry to hear about that. Me and Jabari was talking about you the other day. Man. And old Landon, he asked about you too. Old Joe Landry. I can't even say Joe's last name. But here we go. We're gonna pull it up. Nope. Here we go. We might as well do it. Let me get this together for y'all. And let's go ahead and do it. Let's take a look at, you guys and girls look at it and say, hey, Uber doesn't have the best numbers, especially when we looked at that quarterly, we looked at the annual report, but let's compare it to what Lyft is saying, what their top competitor is saying right now. Did I pull up the wrong one for y'all? I sure did, but it's okay. We're going to get it right. These windows are popping around on me, but it's okay. We're going to get it right. It's trying to hide from me. Here we go. And we are here. This is their annual report. Let's take a look at the number one competitor. Oh. Here we go. Lyft announces fourth quarter earnings, right? Here it is. He said in 2022, we took an important step to strengthen our business and deliver significant value to our customers, says Logan Green. He's the co-founder and CEO of Lyft. The better marketplace balance, as we see today, creates significant opportunities for long-term profitability growth. To take advantage of this opportunity, we must ensure competitive service levels, reinforcement, our competitive position, servicing our demands, reducing our fixed and variable costs will put us in the best position to deliver strong shareholder returns. In the fourth quarter, we achieved the highest revenue of our company history. Okay, shout out to Uber. Not Lyft, I'm sorry. We outperformed our accountants, adjustable EBITDA, excluding the action we took to strengthen our insurance reserves, says the Chief Financial Officer. Our Q1 guidance is a result of seasonal and lower prices, including fees for prime time. Additionally, our different insurance renewal premium, profit loss, we are not waiting for the normalization to achieve competitive advantage. We're focused on driving greater growth and profitability. So they're saying, hey, we had a pretty good quarter. Let's take a look, right? I don't want to see the disclose. So their revenue grew 21%. So that's kind of good. 21%. I think Uber was like 29% to almost $1 billion. They grew up to 969 billion. Okay, they strengthened their insurance reserves. They had a net loss of 588 million compared to his net loss of 283 million for a quarter. Okay, stock-based compensations and payroll tax expense. So, okay, so they wrote off they had payroll tax expense. All right, so let's go down here to these numbers. Let's get down to these numbers, right? So look how small these numbers is. These numbers are in thousands. So we know we was talking billions with Uber. We're talking millions with Lyft. Third quarter of 2021, they reported 13 million. This quarter, they up to 17 million. So when you look at that, they had a 31% growth in top line revenue for the quarter, which is pretty good. But you know, we're talking about millions here, 13 million to 17 million, when Uber was talking about billions. So let's go down to their balance sheet. I'm not going to read everything they put in here, but let's go down to their balance sheets. And you can see why Lyft is $16 now. It wasn't always this way. Look at their current, let's look at some of their assets. Come on, computer, why you want to slow down on me? So this is in thousands. So they're reporting $4.5 million. $4.5 million chump change compared to the competitor, Lyft. And Uber stock used to cost so much more than Lyft. I mean, Lyft stock used to cost so much more than, I never understood why people wanted to buy it. So look at it, $4.5 million in total assets, total liabilities, $4.1 million. You subtract the assets and liabilities, you're going to get the shareholders' equity. The shareholders' total equity is, come on, man, 388. It was 15 billion for Uber. 15 billion total shareholders' equity. So now let's go down to, let's look at the current assets. The current assets may be better. You know, Uber wasn't too pretty on it. It was like a little bit of a loss there with the current assets and the current liabilities. Okay. The total current assets is 109 million. And what's the total current liabilities? Oh my God. Oh my goodness. Look at it. The total current assets. You thought Uber was bad. It was down slightly. This thing, it has 109 million in total current assets, money in the bank, right? 109 million. Uber had like 4.4 billion. And you look at the total current liabilities, 3.1 billion. That's gross. That means if they paid all their bills today, come on. Definitely not good. That's why Uber is like down. I can't even say how much is down so far this year, but look at that. That's horrible compared to what Uber had. So this is why you have to compare companies within their space. Because if you took Uber and compared it to Apple or Walmart or Microsoft, I like to look at what you're doing. What is number 1, 2, and 3 in their space doing? So when I looked at the total assets and the total liabilities, and I can't even think of the formula I came up with, it made Uber look like compared to what I'm looking at, maybe like a value stock, right? But when I compare it to its competitor, Uber looks amazing compared to Lyft. So look at these numbers. We're talking about millions. Remember, with Uber, it was billions. It's not even close, ladies and gentlemen. And this is supposed to be the number 2 person, right? Oh, let me see what my guy Brandon said. He said, we're making the best possible. Appreciate it, bro. Good stuff, man. Good to see you in good spirits, man. And thank you. Thank you for tuning in tonight, man. Thank y'all for tuning in. I see we got 10 people in here, man. We got 10 people in here. I should at least have 10 likes. Y'all hit that like button. Y'all hit the subscribe button, all that good stuff. I got a new camera, too. Y'all tell me what y'all think of this camera. I spent a couple $100 on this thing. Almost $1,000 on this thing. So y'all come through, hit that like button as y'all coming through. But as y'all guys and girls can see, you can break it down looking at Uber, who's up 41% this year, quietly reporting its best quarter. Lyft also reported its best quarter. So it lets me know that sector itself is doing good. But when you look at the fundamentals, it don't even add up. It's not even close. We're talking about millions of dollars with Lyft, but we're talking about $1 billion when you're talking about Uber, right? You're talking about billions when you're talking about Uber, and you're talking about millions when you're talking about Lyft. Look at the current assets. Come on, look at the current assets and the current liabilities. Look at the total network of the company. 15 billion over there. Network of the company, assets minus liabilities on the balance sheet. Just the balance sheet alone is just crazy compared to where Uber is at. Now, if people would make sense, people don't even think Uber never even hit $80 yet. Uber has never been at $80. Lyft was, right? I want to say Uber probably got up to maybe about $50 before everything kind of started to go down. But that's why I look at it. $35 right now. It's my risky stock that I tell everybody about. I think it's right for somebody to come in and buy it out. And if I was Uber right now, I would go in and buy all the assets from Lyft. Stop playing, man. Just go buy Lyft. Or if you're Tesla or Apple, go buy Uber. The company's already making money. It doesn't have the best finances. I'm not going to say that. It's not a value company. It's not it has to be someone who can take it and use that type of information. Al said it. What's going on, Al? Al said the camera looks great, man. Appreciate it. Been a little DJ right there. Okay. But yeah, that's my synopsis I want to give. They came out with their quarterly earnings yesterday. I didn't get a chance to record yesterday. I do like to record. I want to get into recording more in the day when everybody's up and more people can tune in. But you guys will catch it in the morning or the afternoon, things like that. Y'all know what's going on in my world. I have a lot, good bit of things going on. You know, you guys are like my brothers and sisters and cousins that's out there that tune in. That's been supporting me throughout all these years. So this year, I'll be out of town this weekend for the Super Bowl. Y'all let me know what y'all doing for the Super Bowl. But yeah. Anyway, ladies and gentlemen, I don't want to waste too much of y'all time. Let me know what y'all think. Hopefully y'all got something out of it. At least you got a chance to look at that balance sheet and to learn how total shareholders equity is calculated. Because when everything is going well, nobody cares about the fundamentals. Man, remember everybody talked about that Dogecoin and that Bitcoin and this coin and that coin. Nobody know where them coins was coming from. All they cared about was it was going up. He was like, hey man, so what is that coin, bro? I'm telling you, I made money, man. I put in like $1,000, man. I got $5,000. My homeboy put in $50,000. He got $1 million. And then people just like, oh crap, I need to get in. So, but when it started to go backwards and down, that's when everybody starts to pull out those fundamentals. What's going on? Where do these coins come from? Is this real? Now they're talking about banning cryptocurrency altogether. It's crazy how the world is flipped. But anyway, ladies and gentlemen, I got to get out here. I thank all y'all for tuning in. Y'all hit that like, subscribe button. Tell your friends, your cousins. Y'all go check out this podcast. Follow me on Instagram. I am the Investor Show. Let me see, can I pull this up? They put a feature on here where I could put this thing up here some type of way. I got to figure out, play around with it. But yeah, I'm at the Investor Show on Instagram, Facebook, all of the good stuff like that. Y'all check out my book series, Wesley Learns to Invest. Wesley learns about credit. Wesley learns about insurance. You want to see me do more? Go in and contribute to my book drive. Help me give out more books on my path to giving out books and stocks to kids all across America with the ultimate goal of every kid having a funded investment account when they hit kindergarten. That's my goal before I leave this earth. So anyway, I need a haircut too, man. All right, ladies and gentlemen, I'm out of here. Until next video, podcast, cartoon, or whatever y'all see me doing around the globe, you already know my name is Prince Dykes. Peace. Be safe. I'm out. Thank you.